In an increasing, uncertain, and complex global environment, the relationship between the world's two largest economies is prompting more and more attention and discussion than ever. Cross-border economic activities is at a record high across the segments. Here today, to provide an overview of the macroeconomy environment, I am honored to introduce to you Mr. William Yu, Ms. Elizabeth Harrington, Ms. Yichen Ho. Mr. William Yu is an economist with the UCLA Anderson Forecast, where he focuses on economic modeling and forecasting of Los Angeles economy. He also conducts research and forecasts on Asian emerging economies, especially China, and their impacts on U.S. economy. Ms. Elizabeth Harrington has worked in China for over 30 years and helped conduct one of the very first American joint ventures in China in 1981. Since that time, she has worked with top Chinese and American companies, as well as the Chinese and U.S. governments, to build cross-border trade. And she was also appointed the U.S. publisher at large to support the Hurun entrepreneurs and high net worth readers. Ms. Yichen Ho is a litigation partner from Latham Watkins. Her practice focuses on representing Chinese companies based in the U.S. and abroad, ranging from multinational public companies to emerging companies in cross-border business litigation matters. Now, please join me in welcoming Mr. William Yu and Ms. Elizabeth Harrington and Ms. Yichen Ho.
Good afternoon. Thank you for joining us today as we kick off this wonderful conference. Latham & Watkins is also a proud platinum sponsor for the 10-year anniversary of the Wilbur conference. This is a very interesting time. We look back 10 years ago, what it was like between U.S. and China relations, and then a 10-year look forward. This is something that we obviously here are all very interested and engaged in, and some part of our lives touch upon this. So this is a very important session for us. I couldn't be more proud to be flanked by two experts who you will hear from today on rather different and diverging perspectives. You know, China, macro overview and a business perspective. What are we talking about here? Professor Yu will start off by discussing a more academic overview as to what is happening in China. We've talked about an economic slowdown, the economy, the stock market crash, how money is difficult to get out these days. You know, there are worrisome factors here. And Professor Yu has been a leading economic modeling expert and forecasting studier and researcher for many years. We will hear from him on trends and what's happened. On the other side, I have Ms. Elizabeth Harrington, who I could spend 35 minutes introducing. A very impressive background, over 30 years of experience assisting U.S. and Chinese companies in a variety of amazing roles at some amazing companies, including PwC, A.T. Kearney, Quaker Oats, Procter & Gamble, and many more. Ms. Harrington is also management consultant, but more importantly, she is the North American publisher of Hurun by Food Report, which is the Forbes equivalent of the richest Chinese in China, which is obviously very important because we also want to understand what are the trends, what is happening, where's the money going, and more importantly, we want it to come here. So today we will hear from two leading experts. It is my pleasure to introduce Professor Yu to kick off this discussion.
Thank you. Hello, good afternoon, everyone. I'm very honored and excited to be with Yichen and Elizabeth. So today I'm going to talk about China's macroeconomy and investment in the United States. The first message I want to say is this. China's high growth era is over. Actually, I have been saying that over the past 4 years. And right now, finally, everybody is on board with me. Yeah, I'm very glad. China is transforming to a slower and more balanced economy. Okay, so here I would like to show you the data. Actually, like Chairman Tai already talked about this. From 81 to 2013, you can see the average Chinese growth rate, GDP growth rate, is about 10% because of its urbanization, industrialization, high saving and high investment in human capital, physical capital, embracing international trade, and using its competitive advantage of labor to export its manufacturing products, and at the same time imports technology and knowledge from advanced countries and enhance its productivity. It was a phenomenal era. And right now, with its rising economic size and rising labor costs, the economy is slowing down. Okay, so my forecast over the next several years, this decade, its economy will slow down to 5.5%. And then after that, we will see even slower growth rate because of its mature urbanization and aging demographic. So that looks like a kind of pessimistic forecast, but actually I don't think so. Because if you look at the history, those are catching up economy in East Asia, like Asian tigers, like Japan, they all follow the same kind of path of slowing down. And actually, let me give you another example. In the United States, over the past 150 years, the average GDP growth rate in the United States is only 3%. And then it can grow become like the richest and largest economy in the world. So I would say the question is not will China's economy in the long run decline to 3%, 3.5%. I think the question is will Chinese economy in the long run sustain that kind of 3% growth? That is the question. So how can it become more sustainable economy in the long run? And this is my suggestion. China needs to consume more and save and invest less to become more sustainable. Okay, so usually we think investment is a good thing, but there's a basic economic principle which called diminishing returns. It means when you invest too much, those additional investment will produce less and less and even negative returns. Okay, here, this is the chart from Wall Street Journal article the other day. As you can see, this orange line represents the emerging markets' investment share as their economy's GDP, which is rising over the past decade or two up to above 30%. And the blue line represents the advanced economy, which is lower, 20%. And on the right-hand side of the chart is the return of their assets. And you can see, because a lot of investment from this emerging market, you see the return declining rapidly. And right now it's closing to the advanced economy. Okay, so how about China? This is China. China's investment share of GDP is still above 40%. A lot of people, including Chinese government, they have been saying that they have to rebalance to a more consumer-driven, service-driven economy. That's the right direction. But from the data, we still cannot see the significant improvement. So that is something we need to be aware of, because if you still invest a lot, you will see the return will turn to very small and even negative. And if the investment are financed by the debt, then those debts, a lot of them might not be able to repay, and we might see some kind of financial trouble. So the next, I would like to talk about this issue. I think if you follow the United States presidential primary, you know this issue. Trade imbalance between China and the United States has caused economic and political risk. So let me explain a little bit more. So this is the U.S. trade deficit in goods over the past decades. From 2000 to 2015, you see before the financial crisis is kind of very high and then decline, and right now it's rising again. This is whole United States trade deficit. And this red bar represents the U.S. trade deficit with China, just one country alone. So you can see up to 2015, the trade balance between trade deficit, actually we should say trade deficit between United States and China is up to $366 billion, account more than 50% of the whole trade deficit. So that is, I would say, is an astronomical number. Yeah. So we have to face this kind of situation because it means trade deficit means United States is borrowing, is owing China in this kind of context. So let me show you another graph on the right-hand side. That is the percentage, the trade deficit with these several major trading partners as a percentage of US GDP. So you can see the green line is the trade deficit as a percentage of US GDP with Japan. So you can see in 80s, if you are old enough, you probably remember in the 80s there was a huge trade friction fight between United States and Japan. And actually at that time, at the peak, that kind of percentage is only 1.2%. But right now, if you see this, the red line is the trade deficit as a percentage of GDP, US GDP is almost reaching 2%. So that is quite alarming, I need to say. So I would say if your business model is like an old-time thinking, we build a factory, manufacture a factory in China, and then hoping we can export the product to the United States. I think in the future, that kind of model might face more and more headwinds because of this kind of fact. And if Donald Trump becomes the president, now this kind of confrontation we might see right away. So, yeah. Okay. So, of course, some kind of positive force are kind of offset this kind of trade imbalance. For example, Chinese students study abroad or tourists and coming here. They are those kind of we call services in the trade. They are very good. And the other one, which is the things I want to talk about, is foreign direct investment from China into the United States. As Chairman Tai talked about, over the past several years, you can see from 2010, about like $4 billion up to 2015, $16 billion. That is the good thing for both countries, I believe. Yeah. And the other things I think is worth noting is you can see the bar in 2015, it became more diverse. The Chinese investment into the United States had auto, health and biotech, entertainment, ICT, energy, financial and business service, real estate, and hospitality. So this is great, become more diverse. And I expect more are coming. And why? Remember the trade deficit number, $366 billion? So compared to that number, this $16 billion is just a small piece of cake. Because when China had a huge trade surplus with United States, it means China every year they get 300 billion more US dollar at hand. In the past, they buy treasury bonds and with very low return. So I don't think that is a smart decision. And right now, I would say this is a very good sign, because they are using the money more wisely. And then because this kind of investing in the United States will create jobs here, will create more opportunities here, which is also a very good political move for building the relationship between these two countries. Okay, and finally, I want to talk about this. California actually is the top location for Chinese investment because of our high-tech and dynamic innovation and the prime real estate. So you can see here from Rodian Group, in 2015 alone, we got 66 deals made in California, which is way ahead of other states in the United States. Okay, so right now I'm gonna hand it over to Elizabeth. Okay, thank you so much.
Thank you. First of all, it's a tremendous honor to be with you this afternoon. Our future is really in the hands of everyone in this room, particularly the students in the room. You may be familiar with Hurun Report. Hurun Report is the #1 business magazine in China. And what's unique about Hurun Report is it was started in 1997 by my good friend Rupert Hugeworth, who was the partner at Arthur Andersen in Shanghai at the time when I was the partner heading the PricewaterhouseCoopers practice in Shanghai. And private business was only 5 years old in China at this time, started in 1992 by Deng Xiaoping. And suddenly in about 1995 and 97, we started seeing people coming into our office asking us how to build their businesses. And these people had very interesting names like Wan Jingling, who is now the chairman of Wanda, Jack Ma, who is now the chairman of Alibaba. So Rupert began, being a good accountant, began to track these people and say, who are these people building wealth and building value in China, and how are they doing it? And that's how Hurun Report started. We are really a research-based organization. We are not a typical reportorial organization. And from Rupert's research has grown this very famous magazine, the Hurun Report, and a number of other media vehicles. And I'll tell you more about that later. But what's really unique about Hurun Report is we have known and worked with the top entrepreneurs in China for almost 20 years now, helping them build their businesses. And as a result, we have a personal relationship and a personal knowledge with them. What I'd like to share with you today is picking up and adding to what Professor Yu was talking about. How did China get to where it is today based on these wealth creators, and what are those people doing right now, today, to create wealth and grow China in the future? And I would just like to add a very famous saying about China, which is, everything is possible, but nothing is easy. Having said that, 6% annual growth looks pretty good. That's still twice as high as what we're having in the U.S. today. I completely agree with Professor Wu that the rocket ride of 10 and 12% a year is over. However, there will be continued growth in China, and it really hinges on two things: Chinese companies going global and innovation. So those are really the two critical factors that will drive future growth. We have so much research. I'm going to skip a lot of the slides that are in this deck because there's just not time today. But the big headline on this slide is that for the first time in history, there are more billionaires in China than anywhere else in the world, and more billionaires in China than in the United States. In 2015, the number of billionaires in China jumped by almost 200 people up to 568. That compares with 537 in the United States. But the critical thing about this is 2 points. Number one, we are the best research organization for identifying and tracking wealth creators in China, but even we feel that we're really only picking up half of them. So if we can identify 600 billionaires in China, they're really probably 1,200. The other critical point on this slide is 95% of the billionaires in China are self-made. And my colleagues at PricewaterhouseCoopers have recently published an outstanding book that really comes down to how does a billionaire become a billionaire. And they make a very, very interesting point that in corporate America, you're rewarded for being a great performer. Someone else sets the goal, someone else sets the vision, and it's your job to execute it. With the Chinese billionaires, they're really what PwC calls producers. They are people who see the need in the marketplace, they create the vision, they create the goal, and they drive to the execution of it. Everyone in this room, particularly the students, have a great opportunity to be producers going forward. Whether you work for a big corporation or whether you're an entrepreneur yourself, have the producer mentality. That's what's made the people on the China Rich List great. In terms of where these people are, the bulk of them are in China. However, the growth in the U.S. is tremendous. The number of Chinese entrepreneurs coming to the U.S. is extremely important. The U.S. is the #1 destination for outbound Chinese investment in the world today. And what's driving that is rule of law, growth, and opportunity for future innovation. And I just want to touch, again, time is so limited here, but I want to just tell you personal stories about what is Wan Jingling doing today, what is Jack Ma doing today. Wan Jingling really made his fortune in real estate, and until 5 years ago, 90% of his fortune was in real estate. I'm proud to say that PricewaterhouseCoopers taught him how to build an American shopping center. So we had a stake in his early development. But he's now totally shifted his business strategy, and this is a great example of how producers continue to innovate in order to build their businesses. Wan Jingling has recently shifted his focus to entertainment and to sports. Now, why would he do that? Real estate was very successful for him. Very simple. He looked around and he saw what China needed and what the government wanted. China needed entertainment. There was nowhere to go and nothing to do. He put cinemas in all of his shopping centers to get people to stay longer in them. He observed that there was a need for more theaters, so he went out and acquired AMC theaters a couple of years ago. He's now the largest theater owner anywhere in the world. Then he observed that there were not enough films to show in these theaters. So in January of this year, he acquired Legendary Entertainment here in Los Angeles for about $5 billion. He's following the trend. He's continuing to innovate. Probably the most interesting recent twist is that his latest acquisitions are in the area of sports. Now, why would he do that? Again, he's following the trend. The Chinese government has announced that they want people to be healthier in China, and that means healthier diet and healthier lifestyle. The Chinese government is actively encouraging participation in sports. But if you look around the world, what's on television these days? Many sports shows. They're low cost to produce because you're filming, but they have very high viewership, and they have higher viewership among men than they do among women, which is an underserved media audience. So once again, Wan Jingling is continuing to be a producer and to sense that trend and to follow it. He's not just staying with real estate. Wan Jingling is going to be profoundly important for the U.S. He's probably the #1 Chinese investor in the U.S. today, at least as far as our government is concerned. He made his first investment in real estate in the United States in Chicago. He's building a $20 billion penthouse in Chicago. $20 million is much more than any other house in town that I'm aware of, so he's going to transform the real estate climate in Chicago. Here in Los Angeles, he has investments in real estate as well as in entertainment. He is in the process of transforming the entertainment industry in Los Angeles right now. The other person that's important to comment on is Jack Ma. Jack Ma has really innovated in several ways, obviously with the development of Alibaba, and I'm happy to say that one of our young employees at PwC in 1995 went on to be Jack Ma's #2 guy. Go to work for PwC, you'll do well. But Jack Ma has continued to innovate, and his innovation has been in the financial services industry. If people were going to buy things from Alibaba, they needed to have a way to pay for it. He created Alipay. That in turn extended into the Ant platform, which is going to go into internet banking and other kinds of financial services. So the key characteristics of top Chinese entrepreneurs, and I could go through them one by one, is they don't just innovate once. They continue to stay very close to the feeling of what's going on in the market, and they produce, they drive, they create the newest trend, and that's how they continue to create value. The other thing that's worth commenting on here very quickly, when we started doing the Hurun report 15 years ago, 1997, there was one billionaire in China. there are now, this slide's actually out of date, there are now over 500. This has never happened before in the history of the world and probably won't happen again because of the unique circumstances in China, but it will continue. We've already talked about the fact that billionaires live in Beijing, but look at the number that live in the USA. Billionaires follows billionaires. That's one of the other reasons that Chinese billionaires want to come to the United States to be where their peers are. Here's the hit parade for this year. I just want to point out that not only Wan Jingling and Wanda is located here in Los Angeles, but Nine Dragons Paper, the lady over here on the left. So there are many, many people in LA that you perhaps may not be aware of who are actually part of the group that's driving the Chinese producer and wealth creator list. I'm particularly proud to show this slide. It's often said that Chinese women hold up half the world. Depending on which list you want to look at, Chinese women make up 21% of the top entrepreneurs and billionaires in China. But if you just look at the list of the wealthiest women in the world, of the top 10, 8 of them are Chinese. And remember that all of these fortunes are self-produced, and all of them have been produced in the last 15 years. Absolutely remarkable stories, and these are great ladies. The newest addition to the list is Zhu Qifei, who is known as the touch screen queen of China, and she does the touch screen for all of the various IT implements and applications. Chen Li-Hua has been the richest woman in China for many, many years, and like many people, she began her fortune in the real estate area. Yuan has also created her fortune in the real estate area. Many of the young women entrepreneurs are going into other fields, particularly IT. This is a very important slide because to come back to Professor Yu's point of how is China going to continue this growth, they're going to continue it by going global. Marketing 101, if your current market is mature, if your current market slows down, what do? You go global. And that's exactly what the Chinese entrepreneurs are doing. In this year alone, the early part of this year, there are over $68 billion worth of Chinese deals on the table, and that's only in the first quarter of this year. That's up 50% from the number of deals that were on the table at this time last year. So going global is going to be a major factor in continuing the growth in China. I'll just touch on a couple of these very, very quickly. Alibaba has innovated by creating Tmall, which allows Chinese consumers to buy products in the United States from their home in China, have them shipped directly to them. Macy's has just signed up on Tmall, and they think it will exponentially grow their business. So it's a win-win. Alibaba expands, and Macy's goes global together. Huawei has become an innovator in the patenting area for all kinds of telecommunications. Lenovo, interestingly, has just been voted the most popular Chinese brand in the United States. And what popular means is highest level awareness, most positive level of preference by American consumers. And as I'm sure many of you know, Lenovo acquired the IBM ThinkPad technology. It's now completely shifted over to Lenovo. And what's important about this brand preference study is Chinese brands are now seen as not cheap made in China. They are seen as having superior technology, a meaningful point of difference, and good value for the money. That does not mean cheap. That means good value, even if it's an expensive project. I'm happy to say that we at Hurun Report have just produced the first ever study of most popular Chinese brands, a true branding measure, and we're going to be publishing that shortly. That's another huge opportunity. We think Chinese companies are increasingly going to invest in marketing in the United States. Again, we've talked about the fact that billionaires live in Beijing and Shanghai and China, but here's the greatest piece of news for everybody in this room. The United States is the #1 destination for Chinese foreign investment. All of the top 10 companies in China have investments in the United States. And this year, Los Angeles has surpassed New York as the #1 preferred destination for Chinese investment in the United States, and close behind it is San Francisco. New York is still seen as a financial center. Los Angeles and San Francisco don't just have IT, they're diversified into many other industries. That slide is your future. The driver of investment in the United States until about 18 months ago was education. 83% of Chinese high net worth individuals want to send their children to the U.S. for education. They feel it's part of their global knowledge. They feel that it will give them greater self-confidence, better management expertise to start their own company or run the family firm. However, what's very, very interesting is this year, this statistic changed. The #1 reason for investing in the United States this year is not education, it's risk management and risk diversification. This is because of the stock market crash in China. And I want to just touch briefly on the opportunity for financial services in the United States. Historically, real estate was the #1 investment, as Professor Wu's chart shows. It was 43% of all foreign investment by Chinese was either in residential or commercial real estate. And commercial has just exploded in the last 2 years with the Greenland project here in the U.S., another one in New York, the Oceanwide project here. However, Chinese investors are starting to realize that they've got to diversify their portfolios and diversify their wealth management beyond real estate alone. What we're seeing is real estate is still 43% of the investment, fixed income is 17%, stocks are only 13%, and we see the big growth in the next year or so is going to be in trust and true wealth management. The biggest problem that Chinese investors have with wealth management is lack of knowledge of a reliable advisor and how to do it. So for all of you in financial service, this is a huge opportunity going forward, and a new one. You might say, why in the world do I have a chart up here about jogging? You remember I mentioned earlier, Hurun studies everything, lifestyle, finance, business. But this is an interesting clue to another opportunity. You may recall that I mentioned earlier that the Chinese government has a major push on health management, and that's driven by the fact that they want to reduce health care costs. And the way to do that is by having healthier lifestyles. Diabetes is the #1 disease in China, and China is the largest country for diabetes anywhere in the world. The government's trying to figure out how to solve that. The reason this funny little chart about jogging is important is you'll notice that swimming, a traditional Chinese exercise, is #3. Golf, which was the #1 exercise, is now #2, and that has a lot to do with the corruption crackdown. But jogging, more on that later if we have time. Jogging and yoga are the #1 sports for men and women. There's a huge opportunity for healthcare in the United States. What our research shows is most of the Chinese high net worth individuals feel that exhaustion, lack of sleep is their #1 problem, and poor dietary management is their second problem. So when we say to them, well, what are you going to do about that? The answer is, I'm going to take vitamins. Huge, huge opportunity for any type of food and nutritional product, supplement product, big market for food as medicine in China and for vitamins. And I know one of our later speakers is going to talk about vitamins. The other factor that comes up is medical travel. People want to come to a city like Los Angeles for our outstanding medical centers for what they refer to as a body checkup or a physical, and I'm sure everybody in the room is aware of the number of Chinese babies born in the Los Angeles area. OBGYN is 50% of all medical travel to Los Angeles and the United States. But the point of this slide is healthcare and lifestyle is a next big booming industry for U.S.-China collaboration, and it's all about lifestyle. So that means you can get into the advisory business, the health business, whatever. I'm sure everybody would like to know what we know about the corruption crackdown. Probably the most interesting thing about this slide is the classic gifts were always red wine, Mao Tai, jewelry. The number one gift for Chinese now is an Apple Watch. And that's driven by a couple of things. Number one, it's not too expensive. Number two, it's not too ostentatious. But most importantly, number three, it's very usable and it's very cool. We see that gifting is going to continue in China, but it's going to take a whole different form. It's going to be things that are cool, that are going to be useful, and it may involve things like interesting trips and travel to places in the United States and places like LA. Again, why is this chart up here? As people get into risk diversification and they look beyond real estate, another classic form of investing in China is collectibles. Jewelry is at the top of the list. Chinese classic art is still very important, but the big winner right now is contemporary Chinese art. So think of collectibles as another form of wealth management. And for those of you who like cool cars, you'll be happy to see that classic cars have just made the list. I want to use our own company just as an example of the importance of technology to transform a company. Hurun report, when it was just in its hard copy form like this, reached 500,000 of China's high net worth business leaders every month. About 2 years ago, we added digital to our portfolio in a major way. We created our iPad magazine. We have the Hurun website where you can find a lot of our research studies. And we created our daily WeChat Hurun magazine. With those changes, our penetration in China went from 500,000 people a month to 3 million people a month. That's a testament to the power of technology and media. Coming back to what we can look for here in LA, as Wan Jingling has invested in legendary media, what he has talked about doing with that is not only joint film productions in the US and China to make Chinese films more appealing to global audiences, but very importantly, to make entertainment digital for production reasons and to make it mobile and global for distribution and financial reasons. So our own company is a great example of the power of technology to transform an industry overnight. And if everybody will make sure that I have a copy of their card or their contact information, we'll put you on our Hurun Daily WeChat website. It's quite fascinating and fun to read. We even now have an online television show which we distribute through a mobile app. So events we have coming up, that's our event in London where we recently talked about wealth management. We do fun things like a Beijing rally. We have a really great looking team. Thank you so much. It's been a real pleasure to be with you this afternoon. Sorry to be so short. We have, as I say, all kinds of research reports, education, immigration, the Chinese Millionaire, which we publish every year. So if anyone would like information on any of these, please see me while I'm here during the conference. Great opportunity for the future. Go global and innovate. Thank you.
So we've heard today about innovation, technology, real estate, media and entertainment, how opportune, because those are all the topics that we're going to be covering at this exciting conference. I first want to thank Professor Yu and Elizabeth for giving a very abridged version of the wealth of experience and research that has gone into their work and study of China for so many decades. We have a lot of questions for them, but due to time restrictions, probably can't take them now, but please feel free to approach us all day at the conference here today. We would be happy to speak to you, but otherwise, please go out there and have a great conference. Thank you for coming.